Welcome to our Tax Savings Tuesday. Again, this is Christopher. I'm your CEO for our company, Virtual Accounting and Wealth Planning Outsourced Service Solution here in the US. And we're going to talk about our Tax Savings Tuesday. Let me see. I need to check if my audio is working good. All right, so we're going to give you bullet points. We're going to discuss about annuities in today's market. Annuities is a type of product for retirement that also are tax sheltered. Specifically, these are tax deferred investment, where, in other words, you put your money there and it grows for a certain time, but every year that it grows, there's no subject to taxation to any growth. So, but at this moment, especially with the Department of Government Efficiency that people are laying off, this could be an alternative that you don't want to get all amount of your money that are there from your, let's say they give you an early withdrawal or retirement early retirement money. What can you do about it if you don't need the amount, the whole money? So the whether it's a 401k, you could do a rollover to an annuity. So we're going to discuss what are the analyzing current trends in fixed. There are different type of annuities. There's fixed, variable, and index annuities. And what is the role of the annuities in a diversified retirement portfolio, and understanding the fees, risk, and benefits associated with annuities. So let's dive into it. So this is only less than 30-minute presentation. If you guys have questions, feel free to book us on our website at www.wycotax.com to know more about this type of product. We have a replay on our YouTube channel. Go to our YouTube, Chris Wycoco, to watch the replay. And just a disclaimer that this is only for educational purposes. This is not intended for any investment, tax, legal, or accounting advice. And every materials in this webinar are only for illustrative purpose. So now let's dig into it. For example, like Gloria, she's a doctor. She's making a lot of money. Maybe she has a 30-40% tax bracket. And running a clinic, she's making millions, 1.2 million in a year. And what is she going to do with the rest of the money? So the other option, aside from having a 401k plans, index strategy, the health savings account plan, if she's capable to put spare some money, and even if there are other retirees out there that would like to grow their money, that save the principal, there are different type of annuities. You can consider fixed, variable, index. So the fixed annuities, it increase the interest in a multi-year guaranteed annuities, or what you call the MYGA. With rising interest, this type of fixed investment, multi-year guaranteed annuities offer fixed return over several years, attracting those seeking predictable income with higher yields than traditional savings. Now, if you would like not, if you have a higher risk, you could consider variable annuities. So this one is a growth of investment focused on variable annuities. There is a wider array of investment options, including environmental, social, governance funds, or the ESG funds, environmental, social, and governance funds, to appeal to a more socially conscious investor base. Then the last one, we have the index. So the index prevent you from losses. Popularity of the hybrid designs that combine traditional fixed index annuities with features like downside, this is what I mentioned, downside protection, and a portion of a market link gains, offering a balanced growth potential and safety. The three key roles of annuities in retirement. Why does it make sense to put your money here? There's a guaranteed income stream, principal protection, and tax-deferred growth. So when we say guaranteed income, the annuity provide a reliable source of income which can last for life, depending on the type of annuity. This can help or cover essential expenses. So when you retire 60 years old and above, it can cover essential expenses in retirement, offering peace of mind against outliving your savings. I mean, you put your money in the bank, it's still the same amount of money after so many years. Principal protection. This is in comparison with the 401k. This one, you don't lose your principal. So if you put 100,000 there and after 10, 20 years, it's still there, 10,000, 100,000. And then lastly, tax deferred growth. This is, I think we had a discussion a while ago that the annuities allow investment. So every year you're not responsible on paying tax compared with other investment that year to year you pay tax on the growth. So this can enhance the growth potentially, especially for those looking to delay taxes until retirement when they might be in a lower tax bracket. The risk, of course, every type of investments have risk. The risk are liquidity, market risk, and inflation. So liquidity risk come with surrender periods. Of course, if you put your money there, do not expect to get your money in return less than a year. This is more like in a mid-term, short-term investment, more on 10-year plan. Market risk. Of course, the variable specifically returns depend on the performance of the chosen investments. And there is a potential for loss for a principal in down markets. And then you also have to consider inflation. For fixed annuities, provide a guaranteed return, but they may not keep pace with the inflation, eroding purchasing power over time. So you just have to check with your financial advisor which one would suits you. Another thing that you have to check are the fees. What are the fees? There are at least four fees associated with annuities: mortality and expense risk charges. This is typically a percentage of the annuity's account value charged annually, covering insurance guarantees. There's also administrative fees, a fee for managing the annuity, typically ranging from 0.10 to 0.30% per year. Then there are also rider fees. Optional riders often come with additional fees, usually a percentage of the account value between 0.5 to 1%. And then lastly, investment management fees. This can range between 0.5% to 2%. It's advisable to ask these fees before you select your investment. But the benefits, we discussed this. You can customize it, can be tailored with riders like that benefits, guaranteed minimum income, and long-term care options depending on your financial goals. So if you have more further questions, you're welcome to contact us. We provide a worry-free year-round competitive and on-time accounting and wealth planning service solution here in the US. And we do the benefits of outsourcing any accounting or tax needs you have. You can have peace of mind, save headaches, save time, save money, and faster access to grants and loans. So there are, provide financial planning, free financial planning. So basically, we're creating you a roadmap. What would you do next? It's not just about making money. It's about what you're going to do about your money when you're making so much. It's parking your money to savings or investment or combination of both. Again, if you have further question with this presentation, you can always book us on the screen below. This is Christopher. I'm the CEO of YCO Tax and Outsource Account.